In today's video, we're going to talk about mortgage renewals and how hard it is right now for a lot of people to deal with these higher mortgage payments when the renewal offer comes in. But before we get into that, do me a favor, hit that like and subscribe button so you don't miss future videos from me. I'd really love it if you can help me and support me by doing that. So let's start off by talking about what a mortgage renewal is and why is it such a big deal right now? So to give you some context, a mortgage renewal, when you sign up for your initial mortgage and you are going to take a 5-year term typically in Canada. So 5 years ago, you took out a mortgage and now you get to have the honor of renegotiating that mortgage term. So it's up for maturity. The rates are going to go up. Rates have gone up. All we've seen in the media lately is all these different stories about how people are struggling with these higher mortgage renewal rates. So what are we able to do to minimize the impact on your total cost of borrowing? How can we improve your cash flow? How can we make your situation better when it comes to mortgage renewals? So let's get into that. The very first step you need to do is to actually know when your mortgage is up for renewal. You would be shocked at how many people don't even know when their mortgage is maturing. And do you know what happens? Banks know this too. And they take advantage of people because of that. And it's unfortunate to hear, but my last few renewals that I've been working on, the banks sent out these mortgage renewal offers less than a month to go before the maturity date. What they are banking on, pun intended, is that people will be stressed, they will have anxiety, they won't know what to do, and they will just sign the renewal paper back to the bank without negotiating anything because they are worried they don't have time to shop around anymore, and they will just sign it back. And that's one of the worst things you can do because their first offer is always their worst. So it's so important to actually know when your mortgage maturity is because then we can take some preventative action. Most banks, a lot of banks, will actually send out a mortgage renewal offer 4 months before the deadline. And this gives you lots of time to shop around and look at different options. But what we've been doing in the past is we've actually been reaching out to customers and our clients 1 year before the mortgage matures. So what's the benefit of that? Well, the benefit of that is we can actually lock into a rate well before the maturity of the mortgage. If we are in an environment where rates continue to go up, like a Shania Twain song, then it might actually make sense to pay the small penalty and close on that mortgage renewal offer early. Now, if rates have stayed the same or have gone down, we can simply let that offer expire and then do another rate hold for 4 more months. Okay, so step number 2, the second thing you're going to look at when your mortgage is up for maturity is, can we increase the amortization back to the original amount to help you increase your cash flow? Certain lenders allow us to do this depending on how your mortgage was originally registered. So if you originally took a 25-year amortization mortgage and you'd paid it down and now it's down to 15 years, some lenders we can actually increase that back up to the original 25 years. So this is going to help you with your cash flow. You can also go back to your current bank and ask them if that's a possibility. The other way to increase your amortization is to refinance the mortgage and bring the amortization up to 30 years. So this is going to lower your payments, help you improve your cash flow. There's going to be some costs associated with a refinance. You have to pay an appraisal cost, maybe some legal fees, but it might be worth it to save you some money. Another thing we can do, step number 3, that we can do to help with the renewal is maybe we can access some of that equity. Maybe over the past year, you've been borrowing from credit cards, borrowing from lines of credit. Maybe you've got a much higher rate car loan with a high monthly payment. Does it make sense to try to consolidate all of that into one and to lower your overall payment to help improve your cash flow? That's something else to consider when your mortgage is maturing. Can we roll a bunch of other debts into the mortgage? It's so important to be proactive when it comes to your mortgage maturing. A lot of people's payments are increasing. They're going from $2,000, $2,500 a month up to $4,000 a month, depends on the new rate, depends on the mortgage amount, and especially people who had variable rate mortgages with some of the charter banks like RBC, CIBC, TD. As the prime rate started going up, their mortgage payments stayed the same. What ended up happening is their payment wasn't even enough to cover the interest. So those mortgages, when they're renewing, I'm seeing those mortgages with remaining amortizations of 60, 70, 80 years. But at maturity, banks aren't going to let you have a 60-year amortization any longer. They are going to reset that amortization to where it should be. So if you had taken a 30-year amortization initially, at maturity it should be down to 25 years. So they're going to base your new payment on a 25-year amortization, and your payment is going to go up significantly. So that's something you need to prepare for if you are currently in a variable mortgage with a static payment with a bank, like I mentioned, TD, RBC, CIBC, BMO, they all have that product. So it's something you need to plan for, something you need to prep for, something you need to budget for. So mortgage renewals, it doesn't have to be a nightmare. There are things we can do to prepare you for these higher rates, to plan for it. To recap, know when your mortgage maturity is. Let's look at seeing if we can increase the amortization back to the original amount. Let's look at if we can refinance, increase the amortization up to 30 years and consolidate some debts. So there's definitely some options out there. Reach out to myself or your preferred mortgage broker. I'd be happy to have a chat with you. Hit that like and subscribe button. And if you have any questions, just post a comment down below and I'm going to reach out to you and answer it right away.